QCDs, rollover IRAs, and Roth Conversions. Let's spend a few moments today talking about how those will appear on your 2023 tax return as you prepare and finalize those for submission to the Internal Revenue Service, assuming that you did any of those during the course of last year. Number one, understanding QCDs. QCDs allow individuals 70 and a half or older to transfer up to $100,000 of their IRA to the charity of their choice. And this will be excludable from your modified adjusted gross income. Now, how is that reported? Form 1099-R reporting. What happens is your 2023 1099 will have box 2B checked off if you had done any QCDs. And that's because the custodian lacks the first-hand knowledge to determine whether your payout qualifies or meets the QCD rules. You want to make sure that when you fill out your 1040, that on line 4A, you indicate the gross amount of distributions from your IRA, and then on line 4B, you would indicate the difference between the total disbursements minus what you gave away for QCDs. That's how that's accounted for. And then to the left of 4B, you write the letters Q, C, and D. It's similar for tax-free rollovers. When you do a tax-free rollover, a 1099-R will be issued, and you record that on line 4A for the total disbursement, and then on 4B is if you took any money out, that would go there, otherwise it would be zero. Similarly, it's also part of how a Roth conversion would look. You'll get a 1099, which will show the total disbursements from your IRA, and typically no taxes will be withheld, but the Roth will be included in the total disbursements number. That just gets scorecarded, again, on line 4A for the total disbursement, and then for the taxable amount, in this case, if you did a conversion, all of it would be taxable on line 4B. So, as we head into 2024, we just want you to be mindful of wrapping up your 2023 tax information appropriately. If you're thinking about doing QCDs this year, let's do those sooner than later so that we can then move on to the next project, which would be completing any required minimum distributions necessary, and then finally to move on the final project from a strategic tax planning standpoint, which would be the review of the appropriateness of Roth conversions, which we typically look to do around the end of third quarter going into the fourth quarter of the year. So if we sequence it, it'll be a much smoother ride. With that, that concludes today's session. If you have any questions, give us a shout here at the office. Thank you so much. Make it a great day.